What's going on, guys? It's Kai, and on this channel we're going to be looking at all things stocks. I upload 3 times a week on this channel, so if you are new, hit that subscribe button. Just letting you guys know I'm not a financial advisor, but everything I bring you is straight facts, so let's jump into the video. Today we're going to be looking at the stock Sundial. The ticker symbol is SNDL. You know, this stock has been a bit of a crazy one, actually being pumped by Wall Street bets as of now. We've seen crazy gains on this stock. It's absolutely flown through the roof. I just kind of wanted to take a look at it, do my own due diligence, my own analysis on it, and have a look, and then I'll give you guys my opinion and what I think about this stock, and then where I think the price prediction could actually go to. So here's our website. Let's go on About Us. Can't say that word on YouTube. Growing safe and consistent isn't something we take lightly. Our customers trust us and deliver a variety of high quality products, and to help them make informed decisions, we honor that trust by filling our world-class growing facilities with world-class people, experienced growers, researchers, quality and assurance specialists, and more, all experts in the art of science and growing. That word. A little look at their brands and what they have available. So it seems they have 4 main brands. We've got the Sundial, Top Leaf, Palmetto and the Grasslands. Just take a look at some of the products. Don't want to dive into too much detail of these products because obviously you guys can kind of find this for yourself. What I like to do is I like to have like a top overview and just kind of look at what they're offering. So overall, I think that stock, you know, it looks good. It's got some good products. It's got a few different companies. Their website's okay. Overall, like that will be kind of a green light for me. So let's look at the actual stock price where we're sitting at now. Just taking a look at the monthly charts at about January 13th, we were sat at 65 cents. And then we had a few spikes, and it's kind of slowly grown to hit over that dollar mark, and then we've got all the way over here. So it's actually been over 10 days that they've remained over $1, so they would have hit NASDAQ compliance, which is really good. We've had spikes of $3.35, which is insane. That's a lot. A market cap sat at $3 billion, and their average volume is 566 million. But recently it's been 1 billion shares in volume traded. What the hell? I also like to look at the actual holders and what companies are holding this stock. Then you can kind of get a clear indication what companies are backing it. We have Hudson Bay Capital Management holding 13 million shares. ETF Managers Group, Canadian Pension Plan Investment Board, we've got 400,000 there. 1.6% held by insiders, 3.8% held by institutions, and 3.14% held float by institution. So there's not really companies that kind of like I know of or that I've seen before. Again, like that could be a red flag, and I mean could be. You know, there's some people holding quite a lot of stocks within this company. So let's get into the actual evidence of why I think Sundial could actually keep growing and could actually be better, and we could actually make some returns on this. First piece of evidence is Sundial actually announces a financial restructuring and debt-free status. Sundial announced today the company is debt-free following the prepayment of the remaining outstanding principal under its senior secured non-revolving term credit facility of $21.9 million. As of today, no debt remains outstanding. All amounts are denominated in Canadian dollars unless otherwise noted. And here's a quote. It says, while many cannabis companies have significant debt burdens, Sundial is proud to announce that we are now debt-free, said Zach George, which is Sundial's CEO. In February 2020, the global pandemic was just emerging. Sundial was running out of cash just 2 quarters after its IPO. We were in breach of covenants under the term of our senior secured credit facility. Through a combination of asset sales, debt for equity, swaps, capital raising, cash repayments, we have eliminated $227 million in debt this year. Our financial restructuring is now complete, enabling us to bring greater focus to what really matters, delighting customers. The fact that the company isn't in debt is really good news. Like you said there, like over $200 million, it's all been cleared. The fact that this stock price has been growing, yes, it has been shorted, but you know, it seems like they're actually quite switched on and are using this cash for the right thing. The Sundial actually announced a closing of a $74.5 million offering. Sundial actually had a registered offering, and this article just kind of go into a bit of detail to explain it. It's really complicated and really hard to follow. I'll just break it down really easy for you guys. Sundial's gross proceeds from the offering were approximately $74.5 million before deducting underwriting discounts and estimated offering expenses. Following the closing of the offering, Sundial has unrestricted cash of approximately $610 million, in addition to the marketable securities and loans receivable of approximately $61 million and approximately 1.56 billion common shares outstanding. You know, they've got this cash. Again, that kind of links to the fact that they're actually now debt-free and they've cleared all the debts. They're putting the things in the right place, and they're definitely looking to expand and focus on their customers and grow their business. So what Sundial actually have available is the investors presentation, 22 slides long. What I'll do is I'll pick out the key things that actually stand out to me and actually mean something to me. Go into a bit of detail on here. This slide stands out to me specifically is the regional and national market share overview. What we've actually learned from this slide is the fact that they are only based in Canada, so they're a Canadian product. They haven't rolled out to the United States. This is where I think it has potential. Biden is trying to legalize and trying to make it more available, and that is one of Biden's kind of main priority. If this was to be in the United States, it would have a bigger reach, hit more customers, grow potential more. This slide is the fact that the national share of the Canadian market in this sector is actually only 3.3%. In Western Canada, 3.5%, Ontario, 2.3%, Quebec, 4.2%, and Atlantic Canada, 4%. This actually isn't that big. Like, this isn't big at all. They've got a lot of growing to do, and for a company to be this high within the stock market, it definitely has got some price tinkering with it, and I'll get into like what I think of the price at the minute at the end of the video. They're not a huge company, they're not a huge hitter. So this is just some revenue highlights. I know they announced that they were actually debt free, but this actually kind of gives you a few different highlights of what actually the company's revenue is looking like. 43% increase in adjusted gross margin versus Q2 2020. Brand sales shift to 77% versus 69% in Q2 2020, and 12% decrease in dried bulk cost per gram sold versus Q2 2020. 7% decrease in G&A expense versus Q2 2020, and 120% increase in the sales and marketing expenses with a ramp up in brand investment. So they're trying to save money and they're trying to cut their costs. Obviously, I think the pandemic would have had a big play on that, but they had to be a bit more streamlined financially, and obviously this playing a huge part in how they became debt free. You know, I think we got a good gauge of the financials. Like, usually I look at their 2019, but it seems like they've made a massive difference, and we've got some really good insights on the financials here. Overall, my opinion on the stock and my price prediction, I do believe this stock is overpriced for what it is. It is definitely getting pumped, and it is very, very expensive at the moment. What I would do if I was to play this stock, I would either play it on options, literally put a call option in and let it get pumped even more because it has hit that $4. To be honest, the way I would do it is I would wait for the stock to dip to a really low price, to a price that I'm happy with. You know, definitely before investing in stock, you've got to watch it for a few days. I would just try and getting a low price. They will definitely try and suppress this stock from growing, as they do with most stocks. You know, they can't just have them absolutely flying from retail investors. I would wait my opportunity, a longer term hold, in hopes that Biden kind of announces that it's legal in America. That would open up your market, get a bigger reach from that. In terms of a price prediction, if for example, a long term one, I don't really like to give short term ones too much because, I mean, we never know what happens with these stocks, but in a long term investment, Biden was to legalize, we could definitely see this stock hit $4 or $5, I think is a reasonable amount for this. And if they were to continue growing their product, get a bit more of that market share within Canada, and then bring it over and kind of do some more market research and focus on their customers solely, we could see that kind of $4 to $5 region. Overall, I think it is a good looking stock. It's quite a fun little journey to be in, but I don't have a position in this stock. I'll just be completely transparent with you guys. Most of the stocks I talk about, I will have a position. I couldn't pass up the opportunity to talk about this stock because it is definitely an awesome one. I think it's something that I'll definitely be watching. Anyway guys, if you did enjoy this video, don't forget to give it a like. Let me know what price you guys got in, and if I missed any news or information, drop it in the comments down below. I will see you guys on the next video. Peace.